Hey everyone, I think I owe us a little video just to reset today. It closed pretty red 2 days in a row, so I'm pretty sure some people are freaking out. There was real pain in the market today. Depends on what you were holding long. The small caps were green most of the day, and then everything closed pretty badly. If you were in the chat room, then you really had fun because we caught this last bit down. Turned a good SPX trade into like a 4,000% win if somebody stayed in it throughout. So first things first, this is the S&P SPY. Everybody knows it. And in order to understand what happened today, we had the Fed minutes here. The markets were somewhat confused. They released the minutes. I didn't even look at them. I didn't even listen to CNBC, whatever junk they were saying. I'm just watching the price action. And the way they reacted with the bond market and the dollar collapse in a ridiculous way that I've never seen before. So it told me, this is BS. Don't chase anything. They popped to here, and then they fell, and then they recovered, and then whoosh. So when they recovered, that's when I laid out the thesis that we have a scenario where we could test this candle, and if it fails, we're going to do this. And that was the entry point in the SPX. But these are important statements for tomorrow and what happens. So let's try to formulate a plan for tomorrow as to what do I do? Do I pile in short or not? First of all, this is not a correction, and I'll show you at the end why not. This is just two red ticks in a row, two daily ticks in a row that are red. So I'll put the lines that I had this morning. These are the lines I had this morning. I only moved this one because I tried to record this one first time. It was too long. All of these were before the market opened. So they hit the upper pivot line that I had and failed. They tried to hold the lower, the support by the dip, and it did work the first time. They bought the dip and they went back to here. When they came back to it again, they failed, and they tried to hold this one. Trust me on that one. They did try. This is look right there, 15-minute chart. They tried to hold it, and then they couldn't. They fell into a support zone. That's where we're at. So support zone. The bottom line is they tried to hold every support line we had, and they failed. And now they're falling into a support zone. Is it legitimate? Yes, it is, and let me show you why. I'm going to keep the lines a little bit longer. Remember this one, 436, not too long ago, end of July, mid-July. It was an opportunity. They took it, and then they took their time to give us the $10 that we were supposed to deliver. I drew this before the breakout happened. It took them out to here to give the $10, 436. So 446, sorry, from 436. So finally they got it, right? In the process, because they delayed it, they did all of this, and that created a high volume spot. And I'm going to take out my lines. This line I did not draw. It drew itself, and the whole area is high volume. So it is legitimate support zone. If I'm looking for hard lines, the first one would be right here at 438.7. The second one would be the base here at 437 and change. The really hard line is at 436, which served for the breakout, the neckline for the breakout, that line right there. So I extended it from here. I had it stopping here all the way to here. That's going to be important. Now, having lost this line, the target is somewhere down here. So them revisiting the neckline from which they broke out, the 436, would be normal price action. Yes, normal. Scary looking, but normal. So let's zoom out to a daily chart and start feeling good about it. They've been buying dips. That's what they do. That's what they've been doing. So this is not a correction. It's just what has been happening for months and months and months. Now, I will track it for us because the subtle changes will tell us what's going to happen next. Right here, we have no clues that this is the correction. Just one red tick. It's a painful red tick, just like this one. We may get another painful red tick into the week. But I've warned you about this week. I've said buy some protection. Speaking of, months ago, I bought VIX calls. They were green again today, meaning I had weeks of coverage for free. of insurance. Yes, they were red for a while, but that's what insurance does. It loses money. Your car insurance loses money. You don't hate it, because as soon as you need it, it's going to pay you. Same here. I don't hate it. I can change my mind and sell them today and have, you know what, I don't need insurance. Then I would have had coverage for free for weeks. So don't hate losing money on VIX calls. Today they're all green. Side note. All right, so the behavior will change, and we will see it first, more than CNBC, before CNBC. I promise you that. We're better chartists than they are. So we have clues, but no definitive answer yet. If I go down to lower time frames, okay. So what I want to tell you is tomorrow I'll be watching as to what happens on the pop if we get a pop. 443, they're going to be selling it hard. This candle is going to be difficult to overcome. What candle? The around the 11 o'clock Pacific, 2 o'clock Eastern, when they released the Fed minutes, because it was so violent. Look at it from here to here. So take the middle of it, 443 and change. That's what I'm going to be looking at. And then the top where it failed, 445-ish, that gap's going to be difficult. And support below the 436. So that's my play tomorrow. Watch these: 436, 443, 445, and then the gap. What happens within those parameters? That's what I'm going to be looking for. Recap or reminder as to what I'm looking for the whole week. If you remember my strategy video from a few days ago, it was the IWM small caps behavior on the weekly chart. They still have not taken out my vacation candle. That's worrisome. I'll tell you why. If they lose 209, this one, if they lose this bottom right here, they're going to correct down to like 190-ish. And if that happens, the whole market is correcting. I've never seen an index correct that hard and the rest not. They will trade eventually together. That's a 10% correction. Case in point today, the small caps tried to rally. They were up like 0.7%. The markets were flat to red, and then the floor went out from under the S&P, and the small caps went red too. So in fact, the small caps closed minus 1.2%. So they dropped like 2%, 2.3%, 2 point something percent from high to low, from memory. So it was a legitimately bad day. So I'm still watching the small caps. If by freak accident they lose this on Friday or by Monday, we are correcting. And then that would be maybe a game changer in the long run on the SPY. So far, don't call this a correction. Don't call this a comeback, as they say. This is just one red tick. This is the daily chart. The bulls are in charge. In fact, could we be changing hands? Maybe, but there is no evidence of it. What am I going to be looking for tomorrow? I just gave you the numbers. 443-ish, the candle from 11 o'clock Pacific. 436, the neckline that gave us 446, and versus the upper edge of the range, which would be right at the mouth of that gap from the SPY. So that's the plan. Hopefully that helps and gives some perspective so we don't freak out. So this is where I tell you, if you watch candles during the day, you will experience a lot of FOMO and do the wrong things, because you'll be watching ticks. I'll give you an example. That's a 5-minute candle. When you see this, you react to big ticks. Instead, make sure you know the levels so you can overcome this innate fear. So, same on the daily chart. When we see a big red tick, we want to short everything. We want to bail out of everything. We want to buy protection to no end at the very wrong minute when the VIX is up 20% or whatever. But if we can just, 20% up the VIX today. If we can just resist a little bit and use the levels, we would make better decisions, less frantic, and would be better pricing, better level picking, less panic is always better. So look at how sharp that line is. Right here, the breakout right here, the failure right there, and so, wow, right? 436, pretty important. Nick signing out.